Well, welcome back, everybody. Happy Monday. Good to have you here for covered calls and short puts. My name is Mike Fairbourn, and joining the chat by my good friend, colleague Brent Moores, who's very knowledgeable. And folks, any questions, comments, definitely throw those into the chat. I did pick up a question from Ray as we got going. A great way to put those in just early, up front in the Q&A box, and I will take a look at that. Just a minute here, Ray. So good catch on that. Folks, today I want to talk today, though, specifically about some of the short put potential opportunities that traders might be viewing out there in the markets. I wanted to really introduce you to maybe an indicator that you've already seen, but it's sort of an interesting indicator right around earnings. Now, no indicator is 100%, but I will say that this indicator from time to time, and you'll see this pretty frequently, when it does occur around earnings, it oftentimes will give us those interesting indications of a bit of a gap up on earnings and then maybe of a consolidation even to follow afterwards, which can be interesting for a neutral to bullish type options trade, right? In this case, selling puts and to generate potential income. So I want to talk about that. I'm going to introduce you to that. I'm going to share that indicator so you can see it, but you'll get a sense. I mean, it does happen fairly frequently. Of course, nothing's 100%, but I do look forward to showing that to you, each of you, for sure. So, all right, well, let's get going here. By the way, hello to you. We had, checkout four checkouts. Sorry, Ray, Luke, Randy, Krishna. We have Joe, Jed, Riceberg. Welcome, Riceberg, as well as Krishna and others. Any questions, comments? Definitely throw those in the chat box, folks. Let's get started here, though. Looking forward to diving into this. So let's move on into our disclosures. The information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Investing does involve risk, including the loss of principal. Important to note that short options, they can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option just does have a higher risk of being assigned early. Park that in the back of your mind. The paperMoney software application is for education purposes only. Finally here, there are risks associated with investing in dividend-paying stocks. I think a couple of these that we will be looking at today do pay dividends. I don't know if we'll dive into too much detail, but just wanted to state that including, but not limited to the risk that stocks may reduce or stop paying dividends. That was for our dividend disclosure. All right, now a quick note too on rolling strategies. They can entail additional transaction costs, so please be mindful of that. Now, those would include multiple contract fees, which may impact any potential return. So with that, let's move on over and take a look at what we've got here. Okay, well, we might be looking at some of these. Was it in this class? I think it was this class or the last class we were looking at. Generating income last week. We were looking at a couple of companies. Some of these water companies were one that we'd been looking at around earnings. This one had a bounce. I only found it because of this indicator I'll take a look at here and show you in just a moment. But before we get into that, let's just do a super quick review of the S&P 500. A dip back down here, kind of stalling out right at the beginning of November, which seasonally speaking tends to be a pretty common thing to do right around November 1st. And oftentimes, if you look at seasonality, we will get a move to the upside here. Now, it's dragging a little bit. In some of the presidential election years, what we do see is we see prices dragging to about the presidential election before a move. Now, they have been moved to the upside. There's no indication that that'll always happen. Of course, on average, the last 2-3 years that's happened on a presidential election, like 2020, 2016 for sure. We'll see, though. It's a big day tomorrow. It's November the 5th. And let's just see what happens. Traditionally, though, November does tend to be a fairly strong year, but really anything can happen. But there's a little bit of consolidation. I just drew that line in there so you can kind of see it. In fact, I go back a little bit further. You'll see that we are resting near some prior levels there. Okay. With that, we're going to take a dive right into our sectors grid. Show you this just big picture, because this is going to kind of give us a sense of where we might be looking at going today in terms of maybe some areas. I mean, sometimes when markets get a little bit weaker or we don't know what they're doing there, We'll see what happens around the election. I mean, traditionally we said that there have been moves to the upside or towards the end of the year. It remains to be seen. If that happens, it's going to just have to play out. It's just going to have to go up to unfold in that fashion for sure. But if we look over here, some of the defensive areas, consumer staples and healthcare, they've had these long kind of moves, it's almost like a weekly flag pattern. Take a look at this. It's a very, very long-term flag pattern, possibly. It's got to start to get going, though, and we did see some companies giving us some insight of that today. So that's something that could be helpful as we look at this, as we take a look at maybe some areas where we could examine specifically short puts and where they might be. So with that, let's go ahead and take a look at, well, I want to zoom back over here, and I want to point out something too, because Ray brought up a point earlier and said, hey, Mike, you've used this RSI. He didn't say that exactly, but we have used the RSI frequently. Maybe this is something that he's using, but can you put a moving average on the RSI? I think there's actually a way, Ray, to do that fairly quickly. If you go and click on the flask icon up top, just go to a moving average. But with that moving average, what you can do, let's just take the 20. I'm going to drag it down and just place it right on top of the RSI. And I think what it will do is it will put that average on the RSI as opposed to prices. Now, first things first, this may require a think script because I don't know if it will automatically plot it on the RSI. It might just plot it on the closing price of the stock. And first of all, I've got to undo this 1 second. Let's just do that because this could be very interesting. Oh, we know what that's doing. How about this? We've got to put this show study in the box. So there you go. Now, what you see is this is going high. This is actually following price action. So that's not going to work the same way. It's got to follow the moving average of the RSI actual amounts, right? So let me just show you one thing. If you go in here, there are going to be some adjustments. I don't think we're going to get it right now today. It's something I'd be happy to try to develop even during this week for our Think Script class on Friday, because it's fascinating to do. But notice up top here, what are the inputs? What's it based on right there? Closing price. Notice we don't have closing on everything else. It's kind of nice there is one on volume. So if we did have volume down here, we could, bam, throw a moving average on volume. But I'm not seeing it. If it said RSI here, Ray, we could easily put it on there. But for now, it's just going to be on price. And that's not going to make a ton of sense for what you're after. So that's something, let's do this. Let's hit that on Friday. I think that's something I could develop during the week for sure, under the Think Script. We'll try that out, see what I can come up with, okay? An average, a moving average on the RSI. Interesting stuff there. All right, let's get going though. Okay, so a couple of things. First off, within our portfolio here, paper portfolio, a couple of things. We did get hit on a couple of these. Actually, Apple should be closed out. That should not be showing a profit. Sorry. That's, it just closed out the short leg only. Okay. We were looking at these. Apple's earnings there was some volatility ahead of earnings and after earnings. As you recall from a couple of weeks ago, we talked about putting some of these on, and what we were looking at is basically a 50 to 55 delta range for potentially closing these out if they weren't going in our favor, if prices were to dip. We were looking in that range, and there was a close there on the short leg. There was a long leg in there too. I'm going to go ahead and I'll close it out when we're done, but whatever. That shouldn't be there, actually. Okay. TRMB holding in there, AVGO down. It didn't trigger. At least the alert didn't trigger on AVGO. Let's take a look at that one. AVGO. Okay, so AVGO, no, it did dip though. Okay, so it was kind of holding a support level and actually bounced after I think we'd sold that. It was looking okay. Actually bounced off that 20-day moving average and came back down. We're kind of holding. Evidently, I didn't get a trigger on it yet, so we're probably above the 50 delta. Right here, let me just draw a line through there. There might be a little bit of support there, possibly at that level that we're holding. But that was one of the things we were looking at. If it did go against us, is to potentially close this at a delta of 0.5 to 0.55. And where are we? 0.47. We are not there. Oh, that's AVGO. Yeah. So yeah, AVGO. Well, Okay, good. AVGO, we're just not there. 0.47. So if it gets into the range where it's kind of at the money, that's where we could consider closing it. But it is currently down right now. Now it could bounce, but that remains to be seen. We are, excuse me, we don't have earnings until next month. So just a consideration there. By the way, a quick note, since I did bring up Delta here, I wanted to quickly reference it, but Delta, as we were looking at it, this is a Delta column here, but a Delta does impact the price of the option anytime, the price of the underlying stock moves up $1, it will impact it approximately by the amount of the delta. So in this case, these are negative deltas. If the stock were to go higher, that could help this work in our favor because we've got a negative delta there. Conversely, on the call side, it's a positive delta. Okay, just a quick note on that. So we've got that. Okay, we did also have this stock that did get knocked out, and that is gold. Gosh, got a lot of lines on gold here. It did dip a little bit, which was interesting. What we were looking at is not to take a position on it with a short put, but basically for a potential generation of income if it were to hold above the strike price, which I believe we had right through here somewhere. Anyways, that did get closed out. Still even ahead of earnings here, although this company did pre-announce earnings a little while back. So keep that in mind. So that announcement might not be too impactful. It was interesting because we were looking at this company last week and we were saying, well, gold has been so strong, but what happened is actually gold pulled back here, and so did actually the miners. I think the miners across the board pulled back. There's another one. So they did just all dip. Gold dipped, and then the one that really dipped a lot was NEM on a negative earnings announcement. Well, perceived negative earnings announcement by the market. Safe to say it probably wasn't that great with a move like that, but there we go. All right, so that's kind of covers our existing sort of paper money portfolio that we'd had in this class. But I want to move on right now, and I want to talk about this over here, this moving average crossover specifically around earnings. It oftentimes will show some interesting correlations after earnings. In other words, it's not going to light up green until there's a move where the MACD crosses above its average. Okay. And a lot of times when you're going to get earnings in there, you might get movement up or down. Now, if we were to see an earnings announcement that was negative and prices were to go down, you wouldn't see this MACD flash. Okay, you're not going to get a flashing green over here at all. In fact, you're going to get reds, but this is either a 1 or a 0. Either you're getting the crossover. Let me click on it very quickly here so you can see it. And while I'm at it, I might as well just share it with everybody so you can access it too. A quick note, anytime we share these ThinkScripts, because I built this in a ThinkScript class on Friday, as they're not guaranteed for timeliness or accuracy. They literally just take the data coming in. As long as that data is correct, it should be correct on the platform. So we're just looking at actually an indicator here. But as you can see over here, it's just looking for a crossover the last 3 bars. Let me just share that. If you don't have this, it might be of interest to you. I wouldn't be bringing it up if it didn't have some correlations that you'll see here. So there are reasons why I did want to take a look at it. But there it is right there. Let's do this right now. So we're going to break down a couple of these and make some comparisons, and we're just going to do a poll on which ones we could consider for a potential short put trade in paper money. Now, if I come over here, what I wanted to highlight, and you'll see this fairly clearly on some of these companies, you're going to see this. Prices might have been consolidating, but then they might gap up and then consolidate a little bit. Now, anytime you gap up above a resistance level over a long period of time or a shorter period of time, that could be a positive. It could be, first of all, it could be construed as a potential breakout. It could be construed as a momentum play. It could be construed as a trend change. There could be a lot of things behind the scenes that are operating there that could be of interest to us because, well, when we're selling puts, we're looking for a neutral trade that stays above a given strike price down here, right? There's a strike price. We want it to hold above. We're selling puts down here. And preferably, we want to see one that maybe even goes higher. So there you go. This is your neutral, sideways, and that's your bullish. All for around the short put, holding above a strike price is what we're after. Because generally when we're speaking, when that occurs, then we're looking to just collect the income. We're not looking to get assigned options, but they can happen at any time. But generally, if we're above there by expiration, uh, that could be a way to just to collect that income. Is what we're looking to do. So it's kind of nice with a short put. You've got that neutral aspect in there for sure. In other words, it can go down a little too. So let's clear that back off and let's put this on and let's go through some of these with you. And we can line this up. Now, what I like to do, because I've obviously like to take advantage of our ability to list them quickly on the chart over here, just do this. Go into a watch list, go into the S&P 500, for example. We're going to be using that today. Go down into the public folder, select the S&P 500, which we did right now. And then what you could do is right-click on one of these columns up top, go down to Customize right there, and then you can put that script in that I just shared if you want to do that. This is the MACD crossover. And actually, I put it up over here, but it's only going to make a lot more sense. It's going to make a lot more sense if I can actually put it on the chart so we can actually see what is going on. But it's the standard MACD 2 line is what this is. So it's a MACD 2 line. Let's talk about it for a bit here. And we've got the 2 line, which is also known as, I like the 2 line because you're going to get what's referred to as the value line, or they refer to it as the MACD price line. The main line is the main line of the value line MACD. There are the defaults there. Of course, those can be changed over here on the right-hand side, as you can see. But I leave them as the default, as the MACD was originally, I think, created. And let's go ahead and put those on right now. I'm going to make these a little bit thicker. We can keep the average. Yeah, let's put it at 2. We'll keep it purple. I don't mind. Whatever. Let's see, purple, and how about 3 here, and we'll look at black. Okay. So we'll remove the 2 that we have, and we'll put these on right there. Okay, now obviously, NEM, yeah, it's not going to be showing a crossover. So what we're looking for here is this crossover, say, for example, right there. And let's go full screen. More helpful that way. Okay, so there we go. We'll minimize that. I got to redraw my line. Not a problem. Let's do this. So it's right here, for example, right there. Now, I've talked a lot about this indicator in the context of somewhat bullish, sometimes even neutral trades, and how there oftentimes is a tendency you get this crossover with the standard MACD, which is a signal line. The signal line, the average line is the 9 here, and that's just the average. By the way, I should explain this. This is the average of the value line, right? That's the average of the value line. I explained it a couple of weeks ago, and before that too, but it's important, especially if you haven't seen this before, to know what it is. So this is really the mainline MACD. So what this main line does is it looks at a 12 and 26 exponential moving average, and you can see those numbers right there. Hopefully that font's not too small. That is the default, but it looks for the convergence and divergence of these 2 lines on the chart. You know what? I'm going to put them on right now. We've got the time. Let's take the 20 off for now, and I'm just going to add these in. So they are exponential moving averages, meaning that they put more weight on the recent data that's coming in. Okay, but it's a 12 and a 26 is the standard. There, 12, and there you are, the 26 right there. We'll change the colors so we can see those though, and we'll make this a little thicker. Fine. This is going to be, oh, let's see. Okay, let's just check this out, see what this looks like. So I put it on the chart here. So these are the actual lines, and what's going on is the MACD is really a signal amplifier. It looks at the difference between the 12 and the 26. You can see those right here on the chart. You notice what happens when prices move up? The 12 outpaces the 26. The green line outpaces the black line. The difference between these lines over here in width, that's the convergence and the divergence of those 2 lines. And that has a key impact on how kind of spiky or the strength of the underlying value line right there. The value line, or the main line as they refer to it, right there. Let's show you this right here. Do you see how we start to break up here and it just gets wider, 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 wider? It's converging higher. There's a massive spike up to about right there. and then they start to, instead of converge, they start to diverge and get a little bit closer and tighter. And that MACD is a signal line that helps us out with that. Now, getting back to what this is all about, I think it's helpful to explain it so you know what the heck's going on with these indicators and why they could be considered to be used. When they cross over here, when there is approximately a 9 moving average on the convergence and the divergence of the 12 and 26 lines, meaning that main line here, when it starts to break above the average, you'll cross over right there. I'm going to try to highlight this the best I can. But in many cases, it does tend to, interestingly enough, on a shorter term chart, and it kind of ties in with how we sell options, right? 20 to 50 days. I mean, that's kind of fairly short term, a little bit intermediate, but mainly shorter term, depending upon how you define it. But you're kind of breaking above a resistance level. As I'd kind of highlighted, remember on that graph I just kind of showed, you're kind of getting above here, and that MACD will cross over a lot of times when you're breaking. Not every time, but it's a good way to kind of track that in the form of strength to the upside. And a lot of times you can see these around bull flags and breakouts. You'll see a lot of these. And so this is what it looks like. Now that I said all that, had to get it out of the way though. Here is your MACD. This is how many you've got that are recurring right now. And this is kind of a large number. Generally, we're just getting a handful. But because it's earnings, there are some earnings gap and goes out there. Gap higher, and some of them will run. And we can try to spot and see what some of those might be. Let's take a look at the first one right here. Here is Abbott. There's your gap. Okay, this wasn't earnings related. It was earlier earnings, but there's your gap on Abbott right there. Let me take these off just for now so we can see this a little bit better on the chart. Important to see that. But there's a gap right there. Okay, so do you see the strength? Kind of closing this longer term gap, a gap up, just kind of testing now. Will we break out and go? Let me go through a few more and just highlight these for you. Okay, do you see the earnings there? We're getting this coming up in green right over here because we're getting that cross right there. That's what that think script is showing us right there. So it's coming after earnings. It's a response to the earnings move. Now, I think a lot of technicians might look for trades that might set up in similar fashions. In other words, there's a strong breakout, potentially confirmed, down here by earnings. Market's seeing that as a positive, at least is what we're seeing right now. And the possibility of a pullback here, prior resistance becomes support. And we oftentimes, and so we might hold that and run. That is XEL. Okay, things are heating up in the Middle East as well. And yeah, oil, that can be an issue. Let's go through a few more of these. Look at this. These are just all the S&P 500s. It's picking out the earnings, a lot of them. See the gap right there? Why? Because we just got an indication, just barely. You guys see that? Right there. Okay, I had to zoom in. Right there that we broke above. We didn't quite get above the range though. We tested it. Maybe in here some higher lows. That's a higher low, possibly a higher low before prices resume. CLX, there's your earnings, there's your gap, and your consolidation. Question mark is, or the question is, that is question mark as well. But hey, will it take this out and begin to do what it has been doing, running with the underlying trend? That's the question. How many? So about 4 out of 5 already, or 4, well, 3, the last 3. Let's keep going. You see it again? Earnings. There's your gap. We're seeing this because of that crossover. SYK, earnings again, gap. BMY, again, earnings, signal, gap. And this is one I wanted to look at over here because this is kind of a longer term. Well, I drew it a little high. Sorry. Touch point, touch point, touch point. Again, breaking above. Could we consolidate? If we were potentially selling a put down here, right? Question mark. If we did that, could prices, hold at maybe that support level after a positive earnings announcement that the MACD crossover has alerted us to? Could it go down a little bit? Could it go sideways? Could it go up? all three of those scenarios, as long as we're holding above the strike price, right? In most cases, we're just looking to capture the max gain at the expiration date. Okay, but yeah, we don't have time to like go through all of these, but I'm just going to keep going through many of them, and you can see where we're at. Bowie's kind of been dragging a little bit. There's one that's coming up towards a resistance level. Again, will it break out? This kind of closure. That Domino's? Sure is. Domino's Pizza. Okay, that one has earnings coming up. There's another earnings gap. This one has a gap, but not earnings yet. And so go through some of these, keep an eye on them. Some of them, like I said, are at earnings. Some of them are not. Here is CVX. There it is again, right there. Earnings, crossover, above resistance. Okay. Oh, awesome. There is a feedback link in the chat. If you guys are able to do that, just one thing to do, if you're able to do it, just 2 questions it asks there. But if there's anything you find positive or useful from these discussions, or anything else, just definitely fill that out if you're able to, or any, topic requests as well. I look at each one of those, and so does my manager. And by the way, while we're at it, bottom right-hand corner of the screen, consider, subscribing if you would. It's so easy to do. Just click on the subscribe button. You get this great content and great stuff that Brent teaches each week in his class as well, just from our whole group. And if you like today's presentation, hit the like button. All right, you guys, are you with me right now? What questions can I ask before we go into can I answer, I should say, before we go into some of our discussions in terms of the actual short put examples here? We okay? Using the MACD 2 line, and I sent that out. It's in the chat if you haven't seen it yet, giving us an indication here of some of these earnings. This is a fun one to use around earnings. There are a lot of gaps in here. You can just kind of track them and just see, hey, will you get a flag over here? Will prices come up, kind of bounce up and kind of consolidate a little bit? That's what remains to be seen, and that's what we're really looking for here. So first off, let's look at a couple of companies then as we go through this. I wanted to compare these two. Initially, they're both on our list, and they're both getting these crossovers here. XEL. We saw this one earlier. Both energy companies, right? Here is a breakout here and a consolidation, possibly at this level. Could there be opportunities to maybe sell puts down through here? Sure, there could be. Let's look over here on the trade and see what else we've got over here. Now, this company does trade quite a bit. I'm going to shut down that one. We'll look at the next month out. 46 days, so it's right in the range that we're talking about here. There is the delta, and a lot of times these deltas, we mentioned those earlier, what they're all about, but 20 to 40, and this can be an estimate, sort of a percent estimate of the potential for the company to go down below that level. But that's 65. It's right at 41. That's clearly more aggressive. You're going to get a lot more out of this one though than this one. The open interest is pretty good. I mean, well, it's in the hundreds. So let's compare this with another company. We'll choose one. I'll have you guys choose it kind of in a polling format. I wanted to kind of compare the charts though, and then also the liquidity of the underlying put contracts here. What we're seeing over here, really good spread. That's a 65. That's fairly tight. That would assume that we're thinking it's going to hold this support level right there approximately. It doesn't give us a lot of room to the downside. Let's look at the next one. Chevron, looked at that. So another earnings jump. So that's out of the way. Earnings out of the way. Here is your consolidation there. If you drop this back, look at this. Click, touch, and then touches through there, and then a nice gap through there too. A gap. We gapped up. So there could be support that's being held in this range, and we did finally get above really that big round number of approximately, well, right in the 150 range. And these sometimes can represent resistance points. By the way, there's a little bit of more support around that 150 there. It's not too surprising sometimes to find support or resistance around those big numbers. Okay, having said that, let's look at the trade tab though and see what we've got. Whoa, okay. When I say whoa, all I'm referring to is the thousands now. So we've got a lot more liquidity over here in terms of Chevron. Now, the spread on XL was not that bad, right? I mean, it was 5 cents. It was a cheaper stock. This is a more expensive stock, but you're still getting that very cheap range within a dime, some of these. right? The spread's in here. Even some volume today, good volume on the stock. But there we go. What are we looking at? The 150, the 137, just as a general idea. There you go. We talked about the 150 before. Sometimes that can be a support level, not every time, but there you go at 37. Okay, and that was right in here. Okay, so having said all that, let's go ahead and throw out a poll to you guys, right? We're getting some polls out here. Okay, so let's see. Just please choose between these two for a short put. And the first one was XEL, and the second one is CVX. So I'll give you guys about 15, 20 seconds on that. You'll notice that both of them, they're a little bit different, but over here with CVX, I mean, is there the possibility of a reversal in trend? Well, sure. There's a higher high, and we've kind of held that, kind of staircased up a little bit. Possibility of a higher low. And is the trend continuing? Well, earnings is kind of there, and that can help sometimes. It's out of the way, and perhaps we can maneuver past some resistance. So we kind of compared that with XEL over here as one that already has a very strong trend to the upside, already established, and also broke higher and kind of holding at that level there. By the way, there's kind of a longer term of XL Energy up there. Okay, right now we do have Chevron 88%, and I think that is an interesting choice there. So let's end the poll there, and let's just go through and see what we got. 26 votes, awesome. Okay, 88% to 11%. And by the way, you can do paper trades on either one of them. We're just going to do one for the class here. By the way, real quick, yeah, Luke says, AMF, what do you think using the 525 or 825.9 could be too sensitive on the fast exponential? It's a good question. And a lot of times, Luke, I will say this, I think there are going to be some companies out there that, getting back to the exponential, that are going to just move better with that. They might be, maybe there's a little bit more volatility. One thing you can check is within a given industry, go over here. This can kind of give you a little bit of an insight. But if you go over into Market Watch tab, and let's just say you were pulling up a specific industry if you wanted to, in the S&P 500, you can scan for these too. But this is the S&P 500 collectively. Right click, go down to customize, and then add in a beta. The beta is a great way to get a sense of what does that volatility look like versus the general market. The market, S&P 500, is like a 1, and anything above 1 would have a higher beta. If we sort that by beta, these up top here would oftentimes work better with those quicker exponential moving averages. So let's say they're, maybe 50% greater. And I'm just going to throw this out here as a general idea, that just one way to maybe look at this, possibly. You're just saying 1.5 or greater beta might match that. But the slower moving ones, like some of the consumer staples, and we're going to actually look at a couple of those right now, or even the pharmaceutical companies, they tend to be a little bit lower. And then you're kind of looking maybe at the others. But you can always go ahead and just look at it historically and see what that looks like as well. So, good question. Betas can help with volatility. A lot of it's tied into volatility. Okay, so here we are, CVX Chevron Corp. Let's do this. And by the way, how did they do on their earnings? Let's just point to it right there, and we can see it right there. So they beat earnings. A lot of times when you get the gap, you not only beat earnings, but you oftentimes guided higher too. So I'm going to scoot over here. Just for the sake of what we're doing right now, I'm going to go ahead and click on this 150 right here, and we can look at this. Let's just go ahead and take a look at this delta. It's a little bit further down. You can see where we're at. So it gives it a little bit of flexibility, a little bit of a buffer zone to kind of move around a little bit. But again, past earnings, and that could be a big volatile point, right? Can be something to kind of consider there. Let's click on it and see what this shows us with a one contract. And it might be, yeah, see, it's fairly expensive. As you come over here and take a look at this, I might consider just adding a long leg to this and see what it looks like comparatively speaking, and putting it into a short put vertical as an example here, just because it is higher priced. Okay, but you can see just with the short put by itself, the max profit is 360. Always be mindful of commissions. your max loss is 14,640. And that again assumes that we do get assigned shares of stock. And, for every one put option contract that we sell, that's a standard equity options contract, that's equivalent to 100 shares of stock we'd be buying at the strike price, 150. And if Chevron were to go to zero, right, that's where that comes up. So if Chevron stock goes broke, basically goes to zero, that's where that factors in. And sometimes, if it were not doing good, which is what we talk about in this class, a lot of times we look at trade management. If the delta is 50 to 55 or starts to move up, we can try to close that out, as well. All right. And then that's your buying power effect. Now, if we just do one thing in here, we take a little bit off the top here in terms of the profit potential. And instead, what if we go down here to the 145 and we buy this one with it? I'm going to hold the control button on the keyboard. I'm right under the ask price there. If I click on this, it's only 158 instead of about 360 for the credit. But look what we get over here. Suddenly now our max loss is not $14,006. It's $342. The credit's a little bit less, but look at the buying power effect. The requirement is not over the $4,000. It's $342. So a lot of traders might elect for something like this, particularly when it's a higher price stock. It gets more expensive. All else equal, right? It's just a higher, higher margin requirements, etc. Whatever way you want to look at it, it can be. When prices are up like that, it's oftentimes generally the case. Let's do this. If I went ahead and just did additional contract here, let's just add one more contract to see if we can get closer to that 360 over here, the 360 price in terms of $360. That is, in terms of a possible max gain here. Adding one additional contract does get us closer. Now, it doubles the commission, right? Because you've got two of them now. But 360 versus 316, obviously 316 is less. Look over here with me. The max loss, though, is like double that we just looked at, but it's still under the 4,000. So that's a positive. That's a positive. I mean, if you look at it compared to the 4,000 and change, 14,000 and change, I should say, on the max loss, and the buying power effect down here as well, okay, is a lot less too. So I'm going to go ahead and just do that for now. We'll go ahead and just put this trade in as a short put vertical because the pricing is so high. Now, we're not going to have to do this on the next one, on these next two. So let's go to the next two and take a look at these. Now, first up, we're going to take a look at ABT. So we're going to stay in healthcare. It had its earnings already, seemed to have run up a little bit with earnings and kind of found maybe some support down through here, but now possibly breaking above resistance. Here's Abbott Labs for our next set of picks. If we come over here and we look at it, you can see about 3.5 million shares traded already. And we're in the 4 digits here, in the thousands in terms of open interest as well. So what this can do is really equate to a very, very interesting spread here, as you can see. Okay, so that's the first one. The next one, we're going to look at BMY. Let's look at the chart first. So BMY kind of breaking over a longer term level, possibility of a reversal here. Oh yeah, this is oh my gosh, this is a really long-term chart. This is a monthly chart, but you can see we just maybe broke above that high right there. And we're just edging into that area with some earnings. Okay, so past earnings indicator helped us spot that. And there you go. So let's look at the trade, and then we'll throw this one out as well as into our poll, see what we get. But about 6 million shares traded today. All of them, more are actually in these the 1,000 range here in terms of open interest. So we've got really good liquidity, and you can see that. Look at that, 3 cents there, maybe 4 cents through here as well. There are some of your deltas listed right there. It's a little bit high right there, but you can see that one, the 52.50, just using that same monthly contract right there. So real quick, I know we're running low on time here, but I'm going to throw this one in, and curious to see what you guys come up with on this. So first one is ABT, and then BMY, Bristol Myers. We'll throw that out there. Again, both of these are uptrending. So the trend is up. Let's see if we can just get a little bit shorter term than a monthly chart in there. Yeah, here's a 3-year. Oh, okay. So possibly on this BMY, shoulder, head, shoulder, inverted head and shoulders pattern. What do technicians say on an inverted head and shoulders pattern? Folks, weekly. On a weekly chart, you can just get bigger moves. There can be a bigger move here on a weekly, and that could be of interest. But they would say you take this range, let's get a different color, right, for a measured move right there from high to low, and you take this level and you take that, I'm just eyeballing it, but they say somewhere in there may be a measured move. That would be your target for an inverted head and shoulders pattern. Anyways, back to the poll, and we've got BMY. Okay, well, I'm glad I'm spending time on it because it just won 74, and there we go. Thank you for the votes on that. A little bit closer, though. A few more votes for ABT. Again, always just go in and put those paper trades in if you wanted to put them on ABT as well. But let's focus on BMY for now. And I'm going to go back to that daily chart so we can just get a quick visual of where we stand here on BMY. A lot of support, potential, historical support through there. May or may not hold, obviously. We look for it, potential area to hold. There's your gap, right? And if it can hold there, we can see what does unfold there. Okay, so that's that. Let's go over here now and into our trade tab, and voila, get that going over here. Okay, now let's look at this. So the 28 is a little bit cheaper stock. The 28 has got a 28 delta. That puts us about 52.50, and that's right in here. So that gets us a lot closer down to this support level. So we might have a couple of areas of support that might hold us up here. We've got this support. We've got a gap level. I do not want to ignore that gap. These gaps can hold very strong support at times. That's still above the gap. So you've got you've got 2 support levels. If we were to choose that 52.50, now it's not as expensive, right at 52.50, and the premium's not going to be as high either, but you're getting very close to about 90 cents, $90 right in there. That has the highest open interest. Let's click on that right now and just see what this shows us here. We'll add this one to our portfolio. But okay, so max loss is 5,000. Again, that considers being a signed stock and not getting out, and Bristol Myers going bankrupt, going to zero. So that's factored in because it's assuming you own 100 shares and it goes down below a point. And remember, there's a high. If you do go below the strike price, then there's just obviously by expiration or even after expiration, right? There's just going to be a very high chance that you're going to be assigned shares of stock. It doesn't happen in every case. And if you hold above that level, that strike price by expiration, then you're just going to have a higher probability of just collecting that premium, and the short put can expire worthless. And that's the premium, right, that we're bringing in, right? This $90 or, it's 89 cents or $89, 0.89 multiplied by 100. There is your buying power effect, about 1,700 right there on this. I'm going to go ahead and send it through because we are out of time here. All right, folks. Well, there you go. By the way, this indicator that we used to kind of help us today is we did some examples. Oh, we got back to back. There's the CVX right there, that short put vertical. This column here, I will have this MACD crossover column in the archive version, hopefully that'll be up in just a bit. But you'll see that in the description section under more. So you just want to click on that. That'll be there. Again, it's not guaranteed for timeliness or accuracy. It's great to have you all here today. We did a couple of those, a couple of different polls, looked at 4 different companies here. And you guys selected CVX, Chevron, and Bristol Myers for these. So hopefully you can make use of these indicators and just in general ways to generate income using short puts. So on that, thank you, Brent, for your help. Thanks to the production crew helping out. And great to have you all here today. Hope you have a great rest of the day and a good week coming up. See you next time.